Welcome back. You're watching The Money Show with me, Kavita Thakliyal, and let's talk about ESG funds. We all know that every AMC is supposed to have one ESG funds, but then SEBI has now permitted AMCs to have thematic ESG funds also. Now, what does this mean for you, to you as an investor, and how should you be looking at ESG funds and thematic ESG funds as an investment option? I have Tarun Birani, founder and CEO, TBNG Capital Advisors, with me to elaborate more on this. Tarun, good evening and welcome to the show. So ESG category, which is still picking up, and we've discussed this a lot of times on the show as well, where the future definitely is towards this particular initiative, which is good for the environment and healthy for your portfolio also. But when talking about it now, and the way SEBI is looking at it, having categories introduced under ESG sounds very interesting. But as far as the nitty-gritty goes and types of innovations that a fund house can do with the kind of theme that's been slotted out by SEBI, how investor friendly do you think this entire category now looks like?
Right. So, good evening, Kavita. So, ESG funds signify an innovative investment approach, which basically centers around these three important factors, right? Environmental, social, and governance. And all these thematic funds have been positioned around them. So these thematic mutual funds are assessed not only on their traditional matrix of historical performance and business model, but based on their environmental, social, and governance factors. Based on that, 80% of the assets need to be ESG compliant securities, and balance 20% are refrained from securities in stark contrast to the ESG philosophy. So, what are we talking about as a ESG thematic fund is basically it opens the door to various strategy, and there are many 5-6 different unique strategies which can be looked at. One is like a exclusion. By exclusion, I means avoiding specific sectors or practices which doesn't comply with this. Then integration. Integration includes combining financial and ESG factors. Best in class and positive screening. It looks at strategy or companies which have an approval or the positive screened under this category. Impact investing, investing which is making a lot of impact on a lot of environmental, social, and governance things, and as well as sustainable objectives. So wherein how sustainability can be capitalized, a lot of ESG trends can be capitalized. So all these, and transition. So these are 6-7 different themes. I know it sounds little complex, but all these funds will be positioned now with the advent of ESG funds. You will see all these new categories to develop around that.
All right. So now talking about the different themes, if in a nutshell, if you could explain what are these themes and how can investors, basically looking at their portfolio and looking at their financial goals, because that is how you need to strategize your investment portfolio, accommodate these themes and tie it up to a specific goal if at all possible.
Yeah, so basically, I know that financial goal planning and everything continues to be same. There is nothing different there, right? I think what are your long-term goals, core and satellite approach, ensuring what is your risk profile, suitability, all those points continue to be there. If I have to talk about suitability, from a suitability point of view, this is for an investor who is ready to dive into a new category, who has a risk appetite and who has a larger time frame, because this is something as a movement which is happening across the globe, right? ESG as a movement. So definitely India is going to catch up in this movement. So my suggestion is investors who have a long-term outlook towards investing can definitely look at ESG as a theme, and whatever is your personal belief system. I think ESG definitely helps you connect with your personal belief system around environment, society, as well as governance. So all those can be actually looked into, and it's actually a lot of impact investing can happen here. But talking about, can the existing funds cannot buy companies which are ESG compliant? Answer is yes. they can definitely keep on buying these companies. So investors who want to wait and watch, see how these funds take off, and then want to participate, maybe want to see 1 2 3 years of performance, and then maybe they can enter into this category.
Talking about investing in these funds, you think it is time to initiate this particular step now, or one can really wait and see how this entire category develops? And this is not something that you really need as a part of your core portfolio.
Yes, definitely. I don't think this is part of the core portfolio. Core portfolio is already is the one which is helping you achieve your most important financial goals. This is one of the thematic category which comes under the satellite approach. So my suggestion would be, if you want to wait out and see 1 2 3 years how this category actually develops, and actually your existing funds can actually buy into companies which are ESG compliant. So I don't see a problem in that part.
All right, Tarun Birani, thank you so much for being on the show and helping our viewers with all about ESG funds today. Thank you. We move on and let's get your financial